Welcome back, you beautiful people, to the Real Collective podcast. As always, I'm Sean Tassay, joined by my host and friend, Kyle Miller. Kyle, happy Thursday to you. It is getting close to holiday season. Everyone's trying to not be sick desperately. How are you doing?
I'm not sick. It's running through my house, though. It's definitely running through my house. My wife is taking a kicking right now. My daughter had it last week, so it is what it is. 'Tis the season.
That's it. Exactly. I'm battling some stuff, but battling, getting through, figuring a way through. Just trying not to get anybody else sick between now and Christmas, and trying to get
Almost impossible. Almost impossible.
right. So, all right, you don't need a medical update on us. So, as always, hit the like button, subscribe to the channel, share this with someone you think might like this kind of conversation. You can also download the buyer or seller guides below. You can also book an appointment with Kyle or I in the Calendly links. Kyle or I in the Calendly links below, and stick around for about the halfway point where we talk a little bit about this show's sponsor, Leslie Kirk Law Office. Really great people over there, and keep your ears peeled for a little bit more about what they do and how they're a little bit different. So, Kyle, you gotta. Well, of course, the first thing we got to talk about when we're recording is 50 basis points. Like, woof, I don't think a lot of people were expecting that.
Yeah, there was discussion out there about the cut. I think it was almost a certainty that they were going to cut. And then I think with the new unemployment, to see what's up. And so that was a pretty big deal. But again, as I said, the first post I put out yesterday was this doesn't affect fixed rates. And actually, with the post I put out yesterday on my socials was that the announcement was at like 9:50 a.m. And the bond market you can watch online has an hour, like tracks per the hour. And at 9 o'clock, it was down here. And before on the way up to 10 o'clock and at 10 o'clock, it was up here.
Wow.
So it spiked and went up, which is an interesting sign that fixed rates could actually go back up. I think the bank's probably going to hold off a little bit to see how things settle out before they start hedging money at that level, and then not have the ability to bring it back down. But it's a true sign of like it's a little messy out there in terms of everything. So we don't know what's fully going to happen.
Historically speaking, like let's say pre-pandemic, we were seeing variable rates at about 1 point lower than fixed rates. Is that a true statement, give or take? I mean, we're just talking really. And then coming through the pandemic, fixed rates dropped to a crazy low number. And then on the way out, the variable rates rose up crazy high. For the last little bit, as we've seen these variable rates start to drop, is the idea that they're pulling away from fixed rates and getting to that 1% differentiation between fixed and variable? Is that where we're likely moving back to that quote unquote normal?
Well, I think historically, when you look at it, there's the variable rates have always been cheaper overall, right? So if you look at a 50 to 60 year history, if you were someone who stuck with a variable from term to term to term, you have overall paid less interest. And if you're someone who went fixed to fixed to fixed, and so I think typically the variable rates are lower. We're just not in that space now. However, we are very, very close to parity at this point, depending on the type of deal that you're doing. You can get prime -1, prime -105 or 115 in some cases, which will put you at the same or less than a 5-year fixed right now. Now, that's for a specific type of deal. It's not for a refi. It's not for a rental. It's not 30-year RAM. This is definitely on the whole more insured side. So you're buying with less than 20% down. But I mean, I'm doing a deal for a gentleman right now. We found not a loophole, but just a strategic way of doing things. He's going to essentially wrap up some debt and restructure his mortgage to a line of credit, or a mortgage and a line of credit. And we're going to have him at prime -85. So his payments are basically staying the same for someone who's had to, with things have gone up. So it's an interesting way to do it. And I truly feel if you can if you can wrap your head around it, I think variable rates are, my personal opinion is an adjustable rate, variable rate is the way to go, because you're going to pay off your mortgage faster. You're going to be able to ride the wave down. There's no FOMO because you're like, oh, I'm just at the lowest rate available, just about, and it'll probably get there in the next 6 months if they keep cutting. Yeah. And the flexibility and all that stuff, I think it's the right play right now for a lot of people.
Well, I think you believe in it so much that it's been the right play for you. And when everybody else was locking in on the way up, like, oh, you know what? It's going up. I don't want to do this anymore. I'm going to lock into it. You rode the wave, man. You are, I don't know how many people, like what percentage of people do you think rode that wave all the way up and now get the benefit of riding it back down?
You know what? I think a lot of people, I think a lot of people did. I think a lot of people did ride the wave. A lot of my clients who took the variable for the same reasons that I said suggested it originally, at some point were like, well, it is what it is. And here we are, because no one anticipated it to go as high as it did, as quick as it did, yeah, which was completely out of the norm. And I know there's people who are going to be upset that I had suggested that in the first place with my clients. And now they get to ride that wave down. A lot of them are calling me looking at potentially refinancing. And a lot of them at this stage are saying, well, can you just add a HELOC or do a second mortgage? Because it doesn't make sense for me to lock in. Yeah. Like, yeah, it doesn't. So it's just it's a different strategy. And the big difference is if you were, the main difference is if you were on an adjustable rate like I was, which means my payment went up, but my amortization still kept going down. I was still paying my mortgage ahead. It was different if we were working with people who were in like a TD mortgage. I can't do RBC mortgages, but if they're with RBC, CIBC, who had static payments, yeah, where their amortization rocketed to 70, 80, 90 years because they didn't change their payment, that reckoning is coming. That's 2025 and 2026 when we start having to deal with that problem. That problem got kicked down the road. I dealt with my problem from day one. And I don't just mean me, but just people in my situation. We dealt with it all the way through. Those people, RBC, TD, CIBC, yours is coming. And I don't mean that to be like, mwah. It's just that's the next problem we have to try to fix. That's why this cycle, that's why this issue, that's why this is going to be 5 to 7, 10 years of trying to refix what happened, in my opinion, because unless people can just magically pay $400 to $600 more and still live their life easily, right? That's what you have to fix, right? So you're going to pay for your mortgage if you can't, because you just don't get a $400 a paycheck raise, right? Just because, yeah, right? If you can't do that, and a lot of people can't, you're going to pay for your mortgage longer, and that was just part of the cycle.
Now that 70 or 80 years, that's going to drop back off as the rates come down, question mark?
100%. So that's it's interesting too. Like people sit there and go, like, oh my God, right? It's like, no, there is going to be some type of fix, but there's no math, none that say you're not going to have an increase in payment. It's just going to be about how much is it. That's what it's going to be, and how much you're going to have to push your mortgage back to make it fit, and what the bank's going to do to help that. Right. I had a gentleman that we closed his deal in, I think it was September, maybe early October. And then we got the first rate drop right away. And he just showed me, he was with TD, and he showed me his app. And it was like, boom, my amortization went from 30 years to 26 overnight. Wow. Just because of the rate drop. Wow. So this coming down is going to have a positive effect for those people to a degree, because they're not going to have 80-year amortizations. But it's still going to be like, oh, we didn't move our mortgage ahead at all in the last 3 years. It's like, no, you didn't. So
I feel like an 80-year amortization is just like it's not real. It's like an unrealized stock that you have sitting in a thing. It's like, yeah, here's what it will be if this continues like this forever, but it won't continue like this forever, and you're not making any changes. So the 80 years is just a placeholder, say how long it would be if everything goes, but it won't go like that. So when it peels back down to a lower rate, the 80 years is going to peel back off, right?
And yeah, exactly. And we were talking about this last week too. You can completely manipulate your mortgage, right? Like, now again, this is a difficult concept because just the sheer amount of money it takes. But if you had a 30-year mortgage and it had 20% prepayment privileges, theoretically, and it's not theoretically, literally, if you could do it, if you paid your mortgage for 5 years and put the full 20% down of extra payments every year, you're done in 5 years. Right. So where's your 30-year AM? Well, it's never been there. Right. So, but again, the argument then becomes, how am I going to do that? Okay, yeah, I get it. But that's the thing. So it never has to be 30 years. Never has to be 30 years. And the other thing too, I think this is one of the biggest differences. So much of our information comes out of the US, right? And they have that. They have, when you get a 30-year mortgage in the US at 5%, your mortgage is 5% for 30 years. It doesn't change. We have terms and have to reinvest that money every 5 years, 3 years, whatever. Right. That's why a lot of them think they're just like, you see TikToks and Instagrams. They're like, my dad told me the best financial advice ever. Take a 30-year mortgage, but pay it every 2 weeks. You'll have it paid off in 15. And they're just like, it's like, guys, that's literally how ours are set up. Like right now, like it's called accelerated biweekly. Like you'll be fine, you know? But again, it's also the fact that they have that one consistent interest rate forever. Like somebody who bought in 2021 in the States has like 1 point something percent forever. And it's like, wow. Jeff, you're all right, buddy. You're all right. You're going to be okay. So yeah, it's just, but that's some of the differences there too, is that we're taking the math from a source that doesn't exist for us. Right. It's not the same.
It's funny because a lot of times people are like, oh, well, you know, investors say, oh, I'm buying this property, but it doesn't cash flow. And they're always just like, well, then put more money down, right? If you need it to cash flow, just add the magic solution to everything, just add more money, right? And of course, like you say, the question is, well, where does the money come from? So that's the key.
But it is. But I think that's one of those things where, again, I just sound like a broken record, right? It's like, have you done the math? You're making that. Broken
broken. You sound like a broken.
But you're making that decision based on a feeling, because I saw this thing and I heard this, so this must be true. And it's like, or we could do the math and just see it and like, there it is, you know. So do the math and you'll figure out it's not. It feels bad, but it's not as bad as it looks.
Can't fight the math, man. Seems like a pretty good place to take a quick break. We'll take a quick break. We'll come back and have story time with Kyle and Sean. I think you and I both have some good stories from the last week. So we'll have a quick word from our sponsor. As always, hit the like button, subscribe to the channel, share with someone who you think might like this conversation. You can download the Calendly links below to book an appointment with Kyle or I. Download the what else? Buyer or seller guides below. And if you're watching on YouTube, thanks for your eyes. If you're listening on Apple Podcasts or Spotify, thank you for your ears. And a quick word from Leslie Kirk Law Office, and we'll catch you on the flip side. As a real estate broker, I know that having the right legal team is essential for a smooth and successful property transaction, and that's why I recommend Leslie Kirk and her team at Kirk Law Office. Leslie's expertise, integrity, and approachable nature make her a trusted ally for buyers, sellers, and investors alike. Working alongside Leslie is Yulia Shulakevich, whose passion for delivering exceptional client service ensures every detail is handled with care. Fluent in English, Ukrainian, Russian, and Polish, Yulia provides outstanding support to clients from diverse backgrounds, making complex processes feel straightforward. Together, Leslie and Yulia bring dedication, professionalism, and a personalized touch to every client interaction. If you're looking for a legal team that truly has your back, contact Kirk Law Office today at kirklawoffice.ca or call 613-238-8006. With Kirk Law Office, you're in trusted hands for your next real estate transaction. Welcome back to the second half of the Real Collective podcast, where we have story time with Kyle and Sean, everybody's favorite segment. We've got some doozies that have occurred for us over the last month or so. As always, hit the like button, subscribe to the channel, share this with someone who you think might like this conversation. Check out kirklawoffice.ca, like we just talked about, and download the buyer or seller guides below, or book an appointment with Kyle or I in the Calendly links below. Kyle, you got some stories to kick us off with.
Well, I got a Christmas one that I like because it's going to happen before Christmas, and it was a tough one, and we helped out someone, which was awesome. But it ties into a bunch of things. But one of the things I think is why it pays to ask for a second opinion, and sometimes just having open dialogue to just keep talking about what's going on to try to spur a thought of like, hey, how do we do this? I had this young lady who was introduced to me, and she came from a tough situation in terms of like, has a son, slightly special needs, mom lives with her and supporting her, and there was a shelter involved, like rough situation. And and she was in a credit proposal, and had recently been out of it, and all the things that said you can't get this done, right? She could eventually, but we needed to move now. Rent eviction was happening, and there was a fight against the landlord against that, but that wasn't going to win or whatever it was. I'm not 100% sure on that part of it, but she was getting ousted, and we're talking like 1st of December type thing, and just nowhere to go. And she was introduced to me, and I started talking to her about it, and I'm like, look, there isn't really anything I can do in the standard A space. Like there's this problem, this problem, this problem, this problem. I don't hate you. That's just the way this works. And then we started going outside the box and say private deal, and trying to marry that with having mom buy the house and reverse mortgages and everything we could do to place this. Still wasn't working. And finally, I was introduced to a different lender that I had access to, or didn't really know we could work with, but we could. And the first big thing was like, yep, this is fine. We're like, sorry, what? They're like, yep, we could do this, no problem. A rates, big deal. I'm like, I don't understand. Like every rule I know said this is not supposed to happen. So I'm like, cool. So we move ahead, and everything's cool. And this is all turning out to be really good. And then I had said to her too, I'm like, hey, by the way, you have your money in like one of those virtual banks. So when you need to get your money to the lawyer that you have, you make sure you order that draft like 5, 6, 7 days early, because it's got to come through to you, and then you got to give it to them. And they don't move stuff instantaneously. That's the one downside of having a free checking account, is that the bank has to mail you something if you need it, right? She's like, yep, cool, no problem. She was all over it. And then closing was happening. I called her day 2 before closing. I'm like, hey, how's it going? Just making sure. I haven't heard from you. I haven't heard from the lender. Haven't heard from the lawyer, which in our world lots of times means everything's great because no one's freaking out. So like, that's cool. So let's just keep going. And she says, yeah, I'm in a huge bind. What's going on? Postal strike and Purelator. Because the postal strike, the bank had to Purelate it. Fine. It's Purelator. Purelator's like, no idea where this envelope is. Ooh. Sorry, what? Can't find this envelope. Sorry. This is to buy my house. Yeah, can't find the envelope. So we're getting a little small extension, and she calls me. She goes, I don't know what to do. She's like, I don't know what to do. What can I possibly do here? And started working it out, and it was that just some understanding of how this thing works and how it plays out, to just be like, do this, and do this. So call the bank and do this. Then I'm going to give you step 2, which I'm not going to say publicly. And then step 3 should all work out. She goes, bang, bang, bang. She goes, bang, bang, bang. And I'm like, and she texts me back. She goes, oh my God, this is going to work. I'm like, I know it's going to work. Just do that. And she goes, cool. And she got the keys. And we're like, and now we're 2 weeks to closing. She's going to move into her house right before Christmas. Everything I knew said this was never supposed to work. And even sometimes I can be like, okay, well, now I've got a new piece of the arsenal with this lender and how it works. I'm like, cool. There's going to be more people that are going to be able to be helped out, because we kept talking, we kept asking questions. I kept reaching out to different people that I knew to be like, can we, how do we? Then someone said, try this lender. Did, and I'm like, wow. So that's a new arsenal. We helped this lady out of a bad situation. And it's super good. This is one of the super good ones.
That's surprising. There's so many things in there that I'm like, wait, but how? Like, there's a lot of things that point to like, it doesn't make sense.
No
proposal. doesn't sound like that should happen.
Nope.
You know, a lot of other stuff, and then getting A rates on top of all of that, and then you know these tangerine banks. I don't know what this lady's bank was, but these tangerine banks like are brutal. I would have if I'm in that position, my advice would have been call your bank, cancel the check that you have now, make sure all that money's back in your account, have them reissue a check, the same check, and I'll pick it up, or I'll go to wherever you guys are, or if it's going to be repurulated or whatever it is, right? Would have been something like that.
It's what I find wild about it, and she actually said the same thing. This is it's we're 2024.
Yeah.
The fact that we're still having to rely on this today makes no sense. And some of that is even on the bank side. Like the bank person is like, I don't know how to fix this. And I'm like, you just have to look at the situation and go, bud, like, okay, I get it. A wire transfer is $75, right? Like I get that. But we're talking about a house here, right? Like you guys have already spent 30 or 35 bucks trying to purulate this stupid thing that you probably charged her for anyway. 40 bucks extra to make sure this money gets to the lawyer in a matter of minutes, right? Or hours is worth the 40 bucks. Just sell that to her. Like sell that solution. Right. I said it and she didn't even flinch. Yeah. How are you different? Solve the problem. Right. It drove me nuts. I'm like, this never should have been. You never should have been in this situation ever.
This postal strike thing is, like we still have lawyers that want to send checks. Oh, I'll send the check in the mail from one place to the next. There's a new regulation coming down the pipe that says that your checks need to be, sent. Remuneration checks need to be sent from the lawyer to the brokerage. It needs to be received by the brokerage within 5 business days, because it should all just be done electronically. Like I don't know why we're sending checks in the mail. Like brutal.
I think some of it too is I'm like, and this could lead into a couple different stories too, but it's the fact that like we're taking a check and someone's signing it and it's all AML, right? It's all like anti-money laundering stuff. And I'm like, how do you know who signed that check? Right. Whereas if you're at the bank, every single time you go to the bank, they ID you. Every single time, right? And you have all this data in front of you. Just be like, just move the money. Like, just move it. And even just to the point of like how tough it is for our banks to talk to each other. I feel like that's absolutely mental at this stage, right? However, the flip side of that, which is part of our other podcast where we put on our tinfoil hats, is if everybody has the data, then how are we safe in privacy, right? But I don't know. It's a weird thing. Anyways, at the end of the day, super happy that it got done. Yeah. I was super stoked for this young lady, and it's a completely new setup for her. And that'll be the one that feels good for one of the several, but that'll be one of the bigger ones for the year of just, wow, like we made that happen. Yeah. And that was cool. Very cool.
Well, it sounds like she's the kind of person who needs it and deserves it. So awesome. Big shout out. That's a good Christmas story, man. I like that. Yeah. On the flip side, I know you sent me a text that said, hey, blah blah blah. Here's something that someone told me. That shouldn't be my problem.
Oh, you want me to talk about that?
Yeah.
Oh, okay. Yeah. The couple things. It's just I think what I hope to get people to understand from the financing aspect, right, is the fact that it sometimes may not look like it or feel like it to the outside. And if you already have a mortgage, like a lot of this stuff doesn't affect you, especially if you're not changing anything. If you're the older generation, you paid off your mortgage, you have no clue, and no offense, but you don't. You have no idea how different it is today than it was just 6 years ago, let alone 30 years ago to do this stuff, right? And even for the newer generation of people, it's like there's a whole bunch of rules set up that aren't your fault, that totally affect you, and you literally just have to play by them. That's all there is to it. There's no like, oh, well, they need to understand. No, they don't. You do.
Yeah.
You have to understand how this works. And I get it that it's tough. I see it every day. But I had a client we were going back and forth. We were getting real close to just waiving conditions. And the three main things we try to make sure, right, is that income is good. We know where down payment's coming from, and mostly credit. Like those are the three things that we want to make sure the bank's cool with. Everything else is really just paperwork, and it's going to happen before closing, so it's not a big deal. But we want to make sure those three things are solid, because that's what makes the deal just fly off the rails. You quit your job and they find out, yeah, you're done. Like you don't qualify anymore. Yeah, but a week ago they told me, listen, Janet, you can't just quit your job. How are you going to pay the bill? Well, I'm going to get another job. It's 8% unemployment. Are you sure? Are you sure? Right? Like, I hate to say that, but it's true. And just one of the things that comes up is how different, and this is crazy unless you're in it, how different employers like document pay, right? Like they document pay very differently, right? Having worked in the healthcare field and I was doing pay for nurses and stuff, they have premiums for this afternoon and evening, and then a Saturday this and a night this and all this stuff. But so they get pay stubs that are 2 pages because they have all these different things that are accounted for, which is good because it's like bang, 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 bang. But then there's other smaller organizations that are like, bleh, there's all your money. And you're like, well, how do I tell if this is my regular hours or my like overtime or like
right
something else or whatever, right? And they're just like, man, not my problem. And that was part of our conversation. I'm like, I need to document this, and this on your pay stubs.
Right.
And if we don't do that, it doesn't look like it's going to work. And it's not what you said it was. So the letter has to match the pay stub, has to match the deposit, has to match the phone call. If none of those match, there's a red flag and something's wrong. And they start digging deeper and deeper, which they should. But the whole part of this was the comment of, well, look, that's the way my company does it. That shouldn't be my problem. Partially agree, but it is.
It becomes your problem because you're trying to rely on the way that your company does something to go to the people who say, here's how I want you to fit in the box. And you're not fitting into the box the way that I want you to. So now it's your problem because you want to fit into that box because you want to buy a house because you want a mortgage. So now it's your problem. So fix the problem, solve the problem. This is what it is.
And and it's unfortunate, but it's like, sure. They need to understand. No, they don't. We need to understand that we are trying to force ourselves into their model. Yeah. And if we don't fit their model, they don't have to give us the money. Right? And then you start using words like should, like, ooh, be careful. Be careful with should. Should's a dangerous word because it convinces you that you're right and they're wrong. And at the end of the day, they're just right. They're going to be right.
You know what I always say is you don't want to be shoulding all over yourself.
I love that because I always say I hate the word should. Yeah. I use the word should one in my entire transaction. I guarantee it. It's one time, and that's you should get some type of insurance. Doesn't have to be the one I have to sell you. It could be anything, but you need at least that. That's what you should do. Everything else, you should do whatever you want. I'm just saying.
You can use that. Stop shooting all over yourself.
That's a new shirt. That's a new shirt I'm going to get. Stop shooting all over yourself. Nice. I like it.
Definitely had some good shirts. I think that's a pretty good time to wrap up. I think we're about at time. So yeah, Kyle, it was great.
I hijacked that whole episode. Thanks very much.
I love it. Yeah, it's perfect. I'm grateful. I'm grateful. It's seasonal. It's festive. You've got a really good jacket on. That looks like a pretty good holiday jacket.
Almost, yeah.
I like it. I'm good. I'm happy to be the moderator, especially when my voice is kind of nasal. So as always, hit that like button, subscribe to the channel, share this with somebody you think might like this conversation. You can also download us on Apple Podcasts or Spotify or watch us on YouTube. You can also download the buyer or seller guides below, or you can go down below, book an appointment with Kyle or I in the Calendly links to do a personalized information session, strategy session. And as always, thank you again to our sponsor for the show, Kirk Law Office. You can check out their website, www.kirklawoffice.ca, or any of the below. All that stuff will be down there. And until next time, keep it real.
Collected.